Hi, I'm Josh Katz from Josh Katz CPA. You've probably heard the slogan, no tax on tips. Sounds super simple and pretty great, but is it true and does it apply to you? The truth is, no tax on tips is a tax deduction. It's more like getting a rebate check in the mail months and months later. Your employer is still going to withhold federal income taxes from your paycheck, just like always, but the benefit kicks in way down the line when you actually sit down and file your annual tax return. But it gets even trickier because not every person who gets tips and not every single dollar of tips is going to be eligible. The IRS has laid out some very specific rules that we need to get into. The IRS says there are 68 different jobs that are eligible. But if you look at this chart, you'll see it's pretty wild. Just 5 jobs: waiters, bartenders, gambling dealers, food prep workers, and hairdressers. They account for more than half of all the reported tips in the entire country. And what even counts as a qualified tip? Well, the IRS covers all the usual stuff: cash, credit cards, even mobile app payments. But the single most important word is voluntary. And this is a big one. If the tip is not voluntary, then it's not going to be a qualified tip. For example, a mandatory service charge would not be a deductible tip. And now we'll get into the big catches. This is where the simple, catchy slogan totally bumps up against the beast that is the US tax code. First of all, there's a hard cap. The absolute maximum amount of tip income you can deduct per year is $25,000. It doesn't matter if you earn more than that in tips, the deduction just stops right there. And a question we hear a lot is about married couples. What if you and your spouse are both tipped workers? Do you each get to deduct $25,000? The answer is a hard no. You're still limited to a combined total of $25,000 on that joint tax return. On top of that, there's an income limit. If you're a single person making over $150,000 a year, the deduction starts to phase out and eventually disappears. So this benefit is really targeted at lower and middle income workers. And then you've got some weird cave-outs. For example, a musician playing at a hotel lounge might get tips for the crowd, but these are not eligible because the IRS considers them a performing artist. And here's where things get really interesting. The no tax on tips only applies to your federal income tax. This is why the no tax on tips slogan may be misleading. There are huge taxes that are completely untouched. You see this number, 7.65. That's the flat tax for payroll taxes, Social Security, and Medicare. This new law doesn't touch it, not one bit. You and your employer still have to pay these taxes on every single dollar of reported tips, just like you did before. And for most lower and middle income workers, that is a huge deal. For the vast majority of people who this law is supposed to help, payroll taxes are often their single biggest tax. So a deduction against federal income taxes, which they might not owe any money on anyway, doesn't help them nearly as much as the slogan may make it sound. And it doesn't stop with payroll taxes either. This is a federal law. It does absolutely nothing for your state or local taxes. You'll still be on the hook for state and local income tax on your tip income. So here's what it boils down to. If you earn tips for a living, what do you actually need to do and remember? Here are the 3 most important takeaways. First of all, you got to document everything. Good records are now more important than ever. Second, you have to plan and budget for a tax deduction at the end of the year, not a bigger weekly paycheck. And third, never forget that payroll, state, and local taxes are still very much a reality. If you enjoyed this video, hit like, subscribe, and visit me at joshkatzcpa.com.